Hi, eToro users. I'm Danny Vega, eToro's lead video producer. We're very excited about today's tax webinar. I am joined by Bret Kenwell, our options analyst. Bret, welcome.
Thanks for having me, Danny. This will be fun. Taxes.
Hey, it's part of it. It's part of it. Can you hit that next slide, Bret? Here we go,
Yeah,
guys.
let's dive into it.
You should be able to download this content. You might even be watching a downloaded version right now. We've started changing things, but nonetheless, please fill out the survey and always feel free to send me an email if you have an issue, a question. I'm not an expert, but I know people like Bret who I can make answer your questions. So feel free after. Next slide, please. And this is just a disclaimer. This is not investment advice or recommendation. Trading may have tax consequences. eToro does not offer tax advice, so please consult with a tax professional. Next slide. And yeah, we're just going to go over this stuff. Bret's going to kind of steer the ship here. And yeah, take it away, Bret.
Great. We're going to start with just some common tax questions that just relate overall to our tax situation, whether that's with investments, whether that's with crypto, whether that's with neither one of them. Just touching on some common questions, things that people are Googling or wondering, and then we're going to work into a little bit more specifics. We'll try to keep things kind of short and concise, do a nice overview of everything, and hopefully put you on the right track to getting your taxes done in time. Just in case, though, there is a way to extend, and we'll go over that in a minute. So these are some common tax questions. We'll start with those. When are taxes due? They're due April 15th. That this year that it falls on a Monday, and unless you live in Massachusetts or Maine, that is the day you need to have your taxes turned in. Luckily, if you're in one of those two states, you can enjoy 2 more days of your life and get them in on the 17th. So for many of us, probably not, but that's the deadline. There is a way to extend. Again, I mentioned that already, but we will touch on it in a moment. Kind of the big ones, the big deadlines that exist in the tax world when it comes to investments are IRAs. That's a mouthful. Both traditional and Roth IRAs, we have a deadline on April 15th. It follows the tax deadline for the prior year. So it's even though we're in 2024, investors can still contribute to their IRAs for last year's tax, like 2023's tax year. And that limit this for 2023 is $6,500. Now, the limit for 2024 did go up to $7,000. So this year we'll be able to contribute more to our IRAs. But for last year's, keep in mind it is $6,500 limit, and those contributions can still be made for 2023, but only for a few more weeks. And the other one is an HSA account. That's a health savings account. Not everyone has access to an HSA. It depends on your health insurance coverage and whether those are allow you to participate in an HSA. But those two have a contribution deadline of April 15th. For individuals, there's a different limit. That's $3,850 for families. It's $7,750. So keep in mind. However you have those divided on your tax returns, you need to keep the limits in mind. And again, those also went up. The limits for 2024 also increased, but those are the limits to keep in mind. Those are the deadlines to keep in mind. Okay, so let's get into the extension. We've talked about the extension a few times on this show. But if you can't get your taxes filed by April 15th, it's always kind of nice, honestly, just from alleviating the mental burden and trying to remember about your taxes. It's nice just to have it off your plate. But if you can't get it done in time, you can file an extension to get those extended until October 15th. So that is an option. It's better to extend and have the extra time and still get your taxes in on time than it is to, just get them in late. So I would always recommend, if you need an extension, use the extension, but it's always nice if you can just get them done on time as well. That pivots over to whether or not we can deduct student loan interest. The IRS actually allows certain individuals to deduct up to $2,500 in interest that they use to pay on student loans that year. So that is a qualifier that investors will want to look into to see if they qualify for it. Remember, student loan payments restarted not so long ago. So student loan interest is certainly something people are interested in, want to know if they have any relief on the tax side and if they can find it. And the answer is possibly. So always look into that, see if you're eligible for it, and see if you can reduce that tax bill a bit. And we're on to our last question when it comes to common tax questions. When can I expect my refund and what should I do with it? So the IRS is actually usually pretty good about getting your refund to you. You might not assume that, but they actually are pretty good and they're pretty fast about it. And when they do, it's always a wonder of, hey, what do I do with my refund now? I've got an extra few $100. Some people a few $1,000. What should I do with that? Obviously, we can't give direct advice, but it's always wise to consider trying to save at least some of the refund you get. After all, it is a sort of unexpected windfall. Might be a little bit of a stretch, but it's an unexpected amount of money you just happen to get, and so it's always wise to kind of try to do something smart with that money, and it is okay to treat yourself, spend some of it, have some fun with it, but if you can at least save some of it, whether that's sock it back in a rainy day fund or a high yield savings account, or if you're maybe you already feel comfortable with where your savings are, you can consider long-term investments or a retirement contribution. And of course, if people have debts, especially high interest credit card debt, things like that, it's always good to try to pay that down a little faster, and just kind of, if we think of ourselves as personal balance sheets, just try to make some good decisions with that. So just kind of some things to keep in mind, especially, you know, as tax deadlines roll around, and maybe your IRA is in focus, or your refund, you're expecting a refund this year. Just some things to keep in mind. So we'll move to crypto taxes. Cryptocurrencies are certainly a focus from the IRS, and they've been taken a little more seriously over the last few years, especially with how well Bitcoin has done, especially with how much we've seen some of these names rise. Now, a lot of the rally we've seen has been in 2024, but there's a lot of people that may have made investments and sold those investments in 2023, especially towards the end of the year when the cryptocurrencies were a little bit stronger and enjoying a strong finish to the year. So when those if anyone did make a sale in there, then they have to at least consider the tax repercussions of that, and what that might mean for what the IRS is expecting from them. So here's just a quick little, a quick diagram, I guess, that you could consider, that helps let you know, hey, do I owe taxes on my crypto this year? Anytime you sell it, if you exchange a crypto for another one, if you use it to spend money on, if you exchange the cryptocurrency for an NFT or any sort of other good or service, those are times that may trigger tax events. And so you're going to want to be aware of those and know about them ahead of time so that you are not skipping crypto on your taxes. Certainly not something you want to miss, just like a regular investment you wouldn't want to just leave off when you file your taxes. So be aware of those. And be aware when you're also not liable for them. So just buying a Bitcoin does not make you liable for owing taxes, or just transferring them from one wallet to another wallet that you own also does not trigger a tax event. So just know that there's a few scenarios where you are responsible and where you are not responsible for paying taxes. And also keep in mind that the IRS knows. Um, when you have a broker that is executing your trades for you, in the crypto world, they do have 1099s. You should receive a 1099, but in the event that you don't, it pays to double check. Always make sure you are on top of it. The last people you usually want to run into trouble with is the IRS. So always just kind of know your scenario, kind of know what's going on in your crypto portfolios. There is a difference between short and long-term gains. So if you are buying and selling things for less than 12 months or less than a year, so say, just for example, last July you bought some Bitcoin, and hey, it's trading really well. It's been rallying all this time, and you sold it in December, that's going to be a short-term capital gain tax. And if you held it for 12 months or longer, that becomes a long-term capital gain tax. And there is a difference between the two, and the way that they're taxed. The long-term capital gains are taxed at a lower rate versus short-term capital gains, which are taxed at a higher rate, and they actually fall into your regular income tax bracket. So we have a couple tax brackets below. You might need to pause the webinar, or assuming you're on the recording, might need to pause, take a look at some of those just to get an idea. But that's sort of how they apply in a blanket scenario.
Yeah, CoinTracker is a super useful service. Basically, this is going to connect to eToro. You can add all kinds of wallets and exchanges. It's just, it honestly, I think it makes the process about as painless as it can be. You got to get in there and grab a key or two, depending on how many and which different providers you use. But obviously, you guys are eToro users. This is kind of a no-brainer for me. I use CoinTracker every year. I'm just being transparent. That's honestly what I do because it's great. And you do get 10% off as an eToro user. It connects directly to eToro. So you will have to add other exchanges or wallets or anything else you got going on. But it's a great service.
Man, when it comes to taxes, painless is always the right answer, I think. Anything you can do to reduce the pain from that.
I remember doing a couple years without CoinTracker, and I was like, "This is the worst thing that's ever happened to me."
They're so difficult to get right sometimes. So yeah, anytime you can get an assist, it's worth it.
Well, Brett, thank you so much for breaking things down for us this year. Seems like it's still taxes, but I think it's gotten easier with each year. I mean, crypto, once we all learned it was property, we get it now. So hopefully everybody has a relatively easy time.
Yeah, hopefully.
Well, thanks for tuning in, everybody, and we'll see you next time.